he warned that if she were elected, that this would lead to mass selling and market crash, is as stupid as a mud wall, and they're going to bail. And we can see, it seems as though, almost as though that's indeed what they are doing. Now, I don't want to get ahead of myself, but when I look at silver today,
the clock is ticking, and your cash is losing value faster than ever. Inflation is far from defeated, and the system you trust is hiding the truth from you. In this latest and important video, Andy Schectman exposes the dangerous game being played by the Federal Reserve and the false sense of security created by the CPI, job numbers, and market data. What's really happening? Andy Schectman uncovers the real risks and offers strategies to safeguard your assets in this volatile financial landscape. Stay with us, because the future of your financial security is on the line.
I just think it's absurd that the way that the Federal Reserve and their open market committee applies what they believe is the preferred rate for millions of savers and borrowers and spenders and manufacturers and on and on and on. And I guess, to me, what I find most humorous is how they are trying to gaslight us into believing inflation has been defeated. And it's important to understand that the CPI is a worthless statistic, and it's intended to conceal the debasement of the currency, and it's happening at a rapid pace. One of the things I found very interesting about the 50 basis point cut, you had everyone saying 25 basis points, maybe 50. We go all the way back to the beginning of the year and see how many times they've changed their strategy. There wasn't going to be any rate cuts. There was going to be 4 rate cuts. And here we are. We finally got this rate cut, a 50 basis point. And here we are. We look at gold. It's up to basically its all-time high today. Silver's up back again above 31. But one of the things that I found interesting is that actually Treasury yields went higher on the back end of the curve. And that, to me, signals big trouble ahead for the Federal Reserve if they're lowering rates and the back end goes higher. But that's the way it should be if you're thinking logically that a government has given in to inflation, raised the white flag, and said, we're going to focus on our dual mandate of full employment, which is a bunch of nonsense. And in essence, they're doing what all governments have done. They're giving in to inflation and taking the easier path rather than tightening their belt and choosing austerity. They have done what all governments have done, and they have pivoted. And it's I don't know. I think ultimately this leads to some real problems as we continue down the road. I found it also interesting too, just in reading some articles last night about John Paulson, the billionaire hedge fund manager, who has finally said what others have figured someone like him would say, and that is that if Kamala wins the presidency, he will pull $9 billion in assets from various sectors because of what she is proposing, in particular, raising the capital gains tax, raising the corporate tax, and introducing a 25% unrealized gain on people just like Mr. Paulson. And he warned that if she were elected, that this would lead to mass selling and market crashes. And we've been talking about that. There's no question. But the bottom line is that when I look around, I see that we are at a point right now, Dunnigan, where there is no escape from not only the constantly depreciating currency, but also from this massive debt, that burden that we have that continues to grow. And I think they figured that, well, this inflation, which is a hidden tax, is a lot easier than continuing to raise taxes. And this is done at a time when, our stocks are up around all-time highs. Our deficit is at all-time highs. We've redlined the national debt. And then you get these fake numbers like the CPI and the jobs numbers. And it's very difficult for the average person to understand exactly what is happening. But when you talk about these fake numbers, like the job numbers we talked about last week, 1.3 million Americans lost their jobs, replaced by 635,000 people, most of which were in this country illegally, and part-time jobs at that. Switching gears just a little bit to gold and silver, just a couple things I want to talk about, and we can move on. We've talked a lot about over the last few years of India importing copious amounts of silver. And, their gold numbers are up very high also, but India looks at silver in a very strategic manner. They imported almost 46 million ounces of silver just in August. That's around today's numbers. That's worth about $1.3 plus billion, over 45 million ounces of silver in the month of August. And you annualize that out, they are continuing on a pace that is literally draining all of the exchanges. And you wonder how long the 6 or 7 or 8 commercial banks who have been short are able to continue to play this game. It's interesting, and also in looking at the commitment of traders numbers that just came out, it's as if the commercial banks are pivoting and changing the way that they are doing things. They are covering their positions, and they covered quite a bit recently, just the other day. And I noticed in looking at where the silver came from, it didn't come from the managed money. In other words, the managed money are usually the ones that sell the silver to the commercial banks. In essence, it came from the producers this time, meaning the managed money wasn't selling, and the commercial banks pickpocketing them the way that they've been doing for a very, very long time. In this case, managed money said, no, we're not going to sell that silver to you, and it was purchased by the producers. This is telling me that we are getting very close to that moment where the commercial banks realize that being short, naked short, in a market where a country like India can import 45 million ounces of silver in a month is as stupid as a mud wall, and they're going to bail. And we can see, it seems almost as though that's indeed what they are doing. Now, I don't want to get ahead of myself, but when I look at silver today, up over $1 to 31 and change, 31.20, I think it is one of these days that is exactly what is going to happen, is that they will let it run to the upside, realizing that the only way to manipulate a market done again over an extended period of time is to push it in the direction that it is going. And I think they are realizing this is a game that is crossed the line of being foolish and is now into, sink or swim. And I also think we will witness a period of time where all of these commercial banks start to eat their own. It will not be about a coordinated, collusive agreement the way we've seen these 8 banks short on your interview with Ed Steer and the chart that we talked about a few times now. It appears as though they've been doing this in a coordinated, corroborated fashion, and I think that will change. They will start to realize it's every man for himself. One last thing I want to talk about is gold. And, we talk a lot about Saudi Arabia. We talk a lot about gold importation by these countries, a lot of de-dollarization. And it just came out that the Saudi Arabian Monetary Authority secretly, and that's the key here, secretly purchased 160 tons of gold from Switzerland. And that was discovered because of the import data that goes through Swiss customs data. Now, most of these governments, I would argue, have been secretly purchasing gold and silver and all sorts of other de-dollarization techniques for the better part of the last 3-4 years. It's just this time the Saudis got caught with their hand in the cookie jar. And, again, in the month of August, massive imports, 160 tons of gold in the month of August. Well, how much more did they get away with that people didn't catch, or that the customs data didn't report, or that was purchased through sovereign wealth funds, through different channels that are not reported to the IMF or through customs data? I would argue quite a bit. But I read an article. There's a man named John Little, and he's a hell of a researcher, and I quote his statistics quite a bit. And he wrote something down that I just wanted to kind of regurgitate here, because when you think about it, it becomes really interesting. We talk about how gold, in many cases, at least I think it is replacing the dollar, at least on a geopolitical macro scale. You see these countries that are de-dollarizing, and in many cases, it appears as though oil has been remonetized, so has gold. These two assets are worth more than the dollars that purchased them. And he wrote something that I kind of updated it here today. It's a little different than what he wrote, but I want people to think about things this way and why these countries are so keen on purchasing gold. With gold right now today at $25.90 and oil today at $70 a barrel, 1 ounce of gold can purchase 37 barrels of oil. And so the analogy he made was a woman's purse that could hold, he called it a 20-pound capacity purse, that could hold 290 ounces of gold. And that's not too, we always talk about you could take it back.
The financial landscape is shifting, and the decisions you make today will define your future security. Your cash is losing value, and the markets are more unpredictable than ever. Don't wait until it's too late to act. If you found this information valuable, make sure to like this video, subscribe, and hit the bell icon. Share with others who need to hear this message for more crucial updates on how to protect your wealth. Thank you.